right, hey guys, Sam here with you on Wednesday, August 29th, kind of late morning here, and today we decided to poll the Twitter followers, which we often do, to let them decide what we were going to review in video. I've got several up today. Interestingly, everyone requesting spreads to the US dollar rather than Bitcoin, particularly unusual in alts. So we're going to look at some of the major alts here today. I'm get as many done as I can. First up's Ethereum. Here's Ethereum to the dollar. This is a 3-hour chart on Bitstamp. Now, just a quick review as we did this, 5-6 days ago. So I've got this now here. I've got us in a WX and then a very large ABC, which probably other ways to count this, but that would be the simplest way to count this. There's a couple of, the X wave is a bit shallow here. But from the largest degree here, I think we have a reasonable count coming down here. So we had wicked off some of these bigger targets here. You can see it here. So from this 50 here, and we've got this target down here. Is why we've got that wicked off. Now we're going to get over to the right edge. But just to do a quick review. So if we allow for this ABC, put in the W, then the X, and then coming down, here's our A. We get a clean 5 coming down. And we can dig out an ABC into this B wave here, coming here to our 50. Setting up this target down here. And just quickly to just do a quick review here. As we're coming down here, now you look at this and you think, man, 1, 2, I guess that's a lot of subdivision to get us down there here. Well, the reason I'm labeling this as our third, because we've got other contenders we could have considered. I'm just letting the probabilities of wave ratios guide my decision and labeling here. So if I take the length of the 1 projected from the 2, we know the highest probability zone for our third is between the 1618, where'd it go? 1618 and the 175, right where we go here. Right, so you see it? So 1, 2, 3, high probability for my third here in blue. And then if I allow for that, well, then I've got to go work through the subdivision. So I can get a 1, 2, 3, 4. Looks like I get subdivision. Looks like I've got an extension in the fifth. So 1, 2, 3, 4, 5 to come down here to give me the 5 of the 5 of the third here. Right? So you see all of this. If I stack this up here. Sorry. So that would give us our third. Then we get our ABC. Now, I put this on here just to, if nothing else, a reminder of the power of median lines here and why you just, even though that looks like, wow, could that still be having influence that far down? Oh, absolutely it can. And in this case, we catch the median line damn near to the tick. I think it misses by a tick or two. So, draw them. Whenever you've got 3 pivots, whenever you're wondering, why does it stop there? Start looking for median lines for your answer. That often will be what you'll find. So coming down here, 1, 2, 3, 4, now we're trying to figure out whether or not we've got our low in. I think it's somewhat suspect here. Now let's go down to an hourly and we'll work from this 4 pivot here. Let me reset us. Let's see if we can make some sense of this. Now, so here's we're just missing the median line here. There's the reaction. Now, question is, are we done? Well, this just free fall here is where you get a little hesitation because now we're outside of the range of what you'd anticipate for a third. So if I do that same thing, if I take the length of my 1 here, project it right on there, project it from my 2 to my 2, well, here's that high probability zone. Here's the extreme that you would anticipate. So we've gone past the 2618. So we're clearly in an extreme for a potential third. So you got to look at that and say, could that be the 4? Just for the same reason I looked at it before. The problem with this is that the depth of the retracement of, if this were to be the 3, 4, and we came down here in 5, 1, there's a little bit of a stretch to call this a 4, 5, but maybe. It's just this seems too small to me relative to this 2. So if you just think about the depth and the size of the 2 relative to what we'd be calling this our 4, I'm not sure that fits for me. I think this fits better when we come down here and we look at this as a potential 4 as I have it currently labeled. Now we have to accommodate the depth of the 3. So maybe that's just the extreme volatility of crypto. Maybe it's just a push to try and get to the median line. It's hard to make that call. But I just think that this is a better looking 4 compared to this 2. So the symmetry, I think, plays better. Now we can, oh, we can probably get a 1, 2, 3, 4, 5 into this third. So I have all the necessary subdivision to take me down here for a 3, despite the fact that I'm outside of typical wave ratio relationships here for that third. I stick with that as my third. Now, if we go to the length of the third and look for any sort of technical pivot for our fourth, well, you can see here we're to the tick. Well, this is interesting here. So prior support becomes the resistance here, kicks us off. We end up in between the 23 and the 38. So perfectly valid as a candidate here for our 4 relative to the length of that very long 3. So question becomes now, where are we over here? So if we allow for this as a 4, well, we've got our targets down here below. See, now I've got to move these over a little bit. So we've got some real targets. So this remains a viable candidate. So let's zoom in over here and see what we're looking at here. So on the assumption here that I do have it right here and that we've gone A, B, and then I get an A, B, C into my 4 here. Now, coming from that, excuse me, coming from that, well, let me pull this off so you can just see it better. So if we go 1, 2, it looks like we go A, B, C into a 3. So same idea here. I'm just going to take the length of the 1, project from the 2. Now if I pull this over in a diagonal, this is very common. A 1, 2, 7, 2 square root of 1, 6, 1, 8. Very common for our wave 3. So this A, B, C fits rather nicely. Now, we do get a technical pivot here, but note again, so this lack of symmetry that's a little bit problematic. Now we can certainly look at this and go, oh, okay, A, B, C, oh, that fits. Now we do, we'll get there in a second. We do have this same issue here where the 2, the length of the 2 relative to the length of the 4, you know, it's not ideal, but it still plays. So now we would look at that and say, well, okay, if I'm going to accommodate this ABC here, well, do I get a technical pivot here? Well, remember, in a diagonal, we're looking for the 4. This 4 relationship is the strongest trade in a diagonal if you don't catch the 2 into the 3. Because we're looking for the start of the 1 through the pivot of the third. In this case, the pivot low of the third. We're looking for a technical pivot here. So if we grab this as our 4 on the assumption that we have this labeled correctly, and this is our 3, what do? Right to the golden zone, right? So we know it's technical. Likely, algo's defending there. Swing high, swing low, A, B, C. We get just a tick beyond the 618, thereby running. That's why you have to use the 65, because all they did was just run some stops there on the other side of the 618. Right? So they run a few stops, and now we're getting a reaction. Now, does that mean that is the 4 and we're off and down we go? Not necessarily. But we have a technical pivot. So it gives us something to work with. So it allows us to lean into this count as the higher probability unless we see this broken, right? Where we go. If we come back up here and we take this out, well, here would be an invalidation. If we take out the 2 pivot here, well, can't have a 4. Right? So then potentially now we'd have to consider relabeling this. Well, here's the problem with it, and so your eye may see this right off the bat. And I had to work through this, and this is partly what influenced this count. If we do, again, using the same set of tools, so this is a good lesson for using your what I call the alternate price projection tool. That's how it was taught to me. But TradingView calls it the trend-based fib extension. We're just looking for fib relationships between swings. Well, note this. If I take the length of the 1 and I project for my 2 and I pull this over here, because it's very tempting to want to go 1, 2, 3, 4, 5. Oh, maybe we're off into a 1, 2, 3, 4. We're starting with a diagonal. Well, it doesn't play because look at we don't make. So the length of the 1 is longer than the length of the third. Now remember, third doesn't have to be the longest, just can't be the shortest. Well, if we do the same thing over here and we use that tool again, we look at the length of what would be the proposed third in that scenario. Well, we're just a little bit longer here. So 1 and 5 would be the longer waves there, and so that can't play. So it has to be ABC. So we're in a diagonal, of course, with the overlap of the 1. We have a diagonal, and we have a technical pivot. We go right to about the last spot you'd want to allow for that retracement for this to be holding as a diagonal. So given that, we get this target down here. So here's the first target. Now nothing says that has to be the low. This would give us a new low relative to this 3, but then we have these fatter targets down here that are relative to those bigger pulls above. So, and you can see I've got them wicked off here. So we've got a series of hot boxes. Now, if this were going to go 1, 2, 3, 4, 5 here, right, knowing we have all of this confluence, particularly down here at 150. So here's the big, that's the big, remember the 50 that I showed you on the larger degree? Here's the big algo target down here at 150. Now that doesn't mean that we must be going down there, but it certainly is a target we can't ignore. So all of these are potential pivots that we've got to pay attention to. So as I said, I will draw these hot boxes and just watch for a reaction there. So if this were to come down here, let's just assume that we came down here and we did this. So we ended up with this kind of action. Well, if we were to pivot there, given that we have these lower targets, I would be cautious about assuming that the 5th is in. So 3, 4, 5 coming in. So if you think about that as our low here, not that it's not possible. So 1, 2, look at the length of the 3, 4. So the length of the 5th relative to the 3 would be very distorted. Now, if that were to come down lower, if we were to come down here to this longer target, not that I'm dying for Ethereum to go to 150, although I will say this, if Ethereum went to 150, that would be certainly a trade to consider being a bit aggressive on if you had the opportunity to buy it down there, in my view, right? If you're a long-term crypto bull, should you see, so this, that very well may be a pivot for us, but likely my assumption would be we'd just be putting in a one wave. So if we went down here and if we were to finish here, it looks to me like that could be 1, 2, 3, 4, 5, something like that to bring us down. So if I put the wave on that just to put it in context, if that were to be 1, and then, again, I'm just free drawing here. We don't know what this is going to look like. But if we did something like this, then all of this moves over. This would be a sign of strength. It would be a failure to revisit the median line. All right, nothing says we couldn't go. We'd be sub $100 here. So if we pull out now on that and start thinking about that in context, so let me go back to a 3 hour and see how that would fit, right? So you're kind of looking for some symmetry here for this to make sense. So if we go 1, 2, 3, 4, again, we don't have to go that low. But now if you look at it in the larger degree, let's see if I can do it this way. Then we'd have 1, 2, 3, 4, 5. I always forget that. Let me change that color. Let's go to yellow, so maybe you can see that and fatten that up. All right, so then we'd have 1, 2, 3, 4, 5. So symmetry better there. Right, again, nothing says we have to go this low. But if we were heading down to 150, now the whole thing just fits better. It just has better symmetry if we're going that low. So anyone who knows me, follows my channel, knows I'm a long-term crypto bull. So again, I'm not dying to see Ethereum go that low, but if it did, I'd be inclined to tell you that'd be one hell of a buying opportunity. But you're right, so we're getting ahead of ourselves. But I'm just trying to make the point of the symmetry. 1, 2, 3, 4. So you think about that and you say, okay, well, that's the wrong one. If we were to go 2, if I was to take 2 through 3, and this were the 4, well, here's the first algo target. So do you see it? Let me wiggle that. Let's see. So do you see here? So you see the green here if I wiggle that? So if that goes right there, so you can see this overlap here. So again, nothing says we have to go to the second target. But we'd have first target here, second target here. So we've got these several hotspots. Now, this is still in play. Nothing says we have to go that far. All right, so this could be. We don't know what this looks like. We don't know what the 1 looks like, where that pivots. So a lot of this is just me kind of freestyling here and looking for some likely roadmaps of how we could get there. So on the assumption here that this pivot is technical and we're headed towards this algo target, which, let's be clear, is an assumption. If we were to pivot down here, right, so what would we have? We'd have a potential double bottom with this pivot here. Right, again, the symmetry would be so off, right? So we'd be looking at, in yellow here, we'd be looking at that. Not that it's not possible. it just seems less likely here that we're going to double bottom here and just finish with that skinny little 5. It's possible. It's possible. So these are all areas to be looking at if we were to pivot here. So first question is, what happens here? Do we get a corrective structure and roll over, or are we going to go impulsive? If we go impulsive, then symmetry be damned. If we go impulsive, then it's one of two things. Either that's an A wave of a larger correction, or we're off and started on potentially now with a hard low in here at 244 off for a new trend. So you got to wait and see. Nothing is confirmed until you get enough data. Right now, this is all just speculation, just a possible roadmap. But we've got to lay something out. You don't want to just be blind and reactive. You want. That's the whole benefit of everything that I'm trying to teach you here. That's the benefit of using median lines, is that they're forward looking. They give you a potential roadmap of where we're likely going. Same thing with Elliott Wave. Right? These are leading indicators rather than just reacting to what happened with the last swing. Now, doesn't mean that we're not wrong. Shit, I'm wrong all the time. The broader point that I consistently try and make here is that you don't have to be right all the time. You don't have to be right even the majority of the time. It just takes one trade like this where you get the roadmap laid out and it follows. And as I've often said before, it's an unfair advantage. You know what the market's likely to do. And 7 out of 10 times, that's about a reasonable. 7 out of times, it won't follow your roadmap. It just takes that one time when you do. It's literally you're getting tomorrow's paper ahead of time. You want to think of it that way. It's the money management that allows you to be wrong more than you're right. That's the key to it, regardless of whatever methodology you're using. It always comes down to how do you manage the risk. What happens when you're wrong? Are you willing to take the stop and re-enter? I had a member write me today. He'd had 8 losers in a row. Right? That's very hard when you've had that kind of string of losers to pull the trigger on the next one. But that's what it takes. Right? It's the discipline to do it. Right? So first discipline is not letting those 8 losers destroy your account because you were undisciplined about your money management. That you took, as I like to use the boxing analogy, you can give me 8 jabs, but I can't take more than 1 uppercut to the jaw before I'm flat on my back. But I can take a lot of jabs. Right? So jab, jab, jab. So it sets up something like this. We hit one of these major targets. Maybe it's a median line. Maybe it's the confluence of an Elliott count with algo targets. Whatever the reason, you got to pull the trigger, right? Because remember, the market is always trying to get you to do the wrong thing at the right time. That's what the professionals are trying to get you to do. And right now we have this malaise in crypto. People are like, fuck crypto, it's over, whatever. You've got this ridiculous CNBC documentary where we've got Jordan Belfort talking about Bitcoin being a scam. Come on, guys. There's 2 ways you can look at this. Either you're a long-term believer in the crypto revolution and it makes sense to you. Or you're like, who cares about that? All I know is that I've got volatility, liquidity, and ease of trading. If you've got that, you don't need to get into the long. Is crypto going to change the world? These are tradable assets. Can we extract profit from it? Can we benefit from this? Just about the time that everybody turns away from crypto, that's the time to be paying attention. So I am not convinced that this correction in crypto is over, but nobody's more bullish long term than I am. Well, there might be a few, but I'm among the most bullish within the crypto space. So very little that I've sold. I'm long and strong because I'm a long-term believer in the space and in the crypto revolution. So I know that influences my buy. I know I have that bias in the market. Let me say it that way. I recognize it. So yeah, I'm looking for buys, not sells. That's me personally, right? You don't have to do what I do. I'm just trying to teach you here that the main point I'm trying to make here is that wherever we pivot, let the price action dictate your next move. What's the probability? What's most likely to happen next? Right? That's all you get. No certainty, no absolute. Nobody knows where it's going next. I don't know where it's going next. Neither does anyone. All we can do is say, well, the probability, there's a trade setting up here with a risk reward that's favorable, and I can accept the loss should I be stopped out. It's as simple as that. As to how you make that decision, I'm giving you one methodology that you can use that hopefully every time I do a video here, and we're up to almost 600 videos, it's just building the case for this methodology. Now you can discount it. God, there's no shortage of comments I get from people saying Elliott is BS. Fine. You use whatever you want. As I will often tell you, you don't have to use Elliott Wave Theory. I think it adds value. Every time I show it to you here, I think I'm building that case. I'm proving that case, if you will. But doesn't mean I'm not stopped out all the time. I'm wrong way more than I'm right. Way more. But the markets have been very, very good to me. So, I'm comfortable with that. I know that. I expect to be wrong more than I'm right. This is not about me making a video telling you, oh, I'm right, I know what's happening. I'm just creating probability zones for you and showing you a methodology that can be applied consistently, day in, day out, whatever time frame you want. I tell you, I would encourage you to stick an hour and above. Choose your weapons, right? And then make a decision based on your risk profile, your trading plan. Do you have a plan? Let's start with that. Right? Probabilities, forecasts, that's all you get. All right, so there's 20 minutes on that. I think this still looks like there's more down here before we're up. I'd love to be wrong. I'd love to be wrong. Here's a case where being wrong more than you're right would be an advantage because I'm long a lot of Ethereum. All right, guys, I'll wrap it there. We've got a few more to do today. Okay, see you later.